So, Patrick, listen, I came across this graph and I thought it was very curious because I know you recently quit drinking, and I'm trying to correlate the dates here, buddy, but it kind of looks like beer and wine sales have fallen off a cliff when you stop drinking. So, do you think this is correlated in any way?
Well, I think it's an indicator, perhaps, but if we paid closer attention to, tequila, whiskey, and vodka, I'd like to find those stats, then definitely I would be guilty as charged and be responsible for that.
Having seen this now, I think just give me a few minutes here, Patrick, and I think what I'm going to do is I'm going to invest in some of those companies and then convince you to start drinking again so we can get the stock prices back up.
No, I'm not drinking again. I'm done.
All right, Patrick. Today, as we shoot this show, it is Tuesday, January 23rd, and tomorrow we have a rate decision. Now, what was the Patrick prediction from previous? I want to just find out what you did say, and then are you holding firm to what you did say? And you can change your mind. That's okay. I'm okay with that. I won't make fun of you too much if you change your mind. But the point is that what is the Patrick prediction? The rate decision's coming out tomorrow. By the time this show airs, the rate decision will be published. So this is like perfect timing in terms of a Patrick prediction.
Well, I haven't changed. I mean, they're going to hold the rate. I don't think there's much chance of them reducing it. There's some would think that maybe they'll go up a little bit, but that's not certainly what's worked into the math these days. I think they're going to hold. They would be smart to hold. I think it would be definitely the wrong move to increase, given that inflation, we'll talk about that shortly. Inflation is up a little bit, but they're not going to react to that yet.
So let's talk about the bigger conversation, though, which is, okay, I agree, by the way. I think they're going to hold. I think everyone pretty much agrees they're going to hold, albeit we've been surprised before.
Whoa, didn't see that coming.
But there was a big consensus. Like everybody, as of late November, early December, was kind of saying,
okay, listen, we're going to get a cut. Probably a rate cut in the first quarter, maybe second quarter, but the first half of the year, we're definitely getting a cut, maybe an entire full 100 basis points.
That's what a lot of people were saying. We talked about it on this very show. Do you still feel that way now, Patrick, having gone through the Christmas season, the holiday season, the holiday shopping season, and kind of the market sentiment? Where are you at with rate cuts this year? Because I agree they're going to hold. We also agree eventually they're going to cut. When do you see that cut coming?
Well, I mean, it's anybody's guess. We don't know when it's coming, but we also know that we're at the effect of what the U.S. is doing. So we have to keep our eye on the U.S., see what they're going to do. There's been lots of optimism that, cuts. I think the bond market's worked in as many as 6 cuts this year, which is, I think, not going to happen. But it's interesting. So quarter point, it'll shift the sentiment. Now, our real estate is really driven a lot by sentiment. And when they start to cut even a quarter basis point, things will start to get a little bit more exuberant. And they know that. So they're going to be very guarded around it. Having said all of that, I don't know. With where it's going, I'll be surprised if we get more than a quarter in the first half. I think if we're going to get anything, it'll be in the back half of the year. But what's interesting about historically, if you look at rate reductions, we may get nothing. And the bank, in this case, our central bank, Bank of Canada, could do what they might be expected to do, which is overreact. And they may do nothing, realize that holy cow, we've blown it. We've slowed this economy down too much, which I think is starting to happen. I don't necessarily think they're starting to see it, which is to say they could do a full half or a full 100 basis points in one shot. And that may happen later this year, depending on what happens economically. So as much as we look at, quarter, they may just hold off and then realize they'll wake up one morning and go, oh my gosh, we blew it. And then go bam. So I think there's a possibility of that.
That's actually a good idea, Patrick. We should have the producers of the show do some research and see when they did do cuts in the past, how big were those cuts? Are they, like you said, are they quick little paper cuts of a quarter basis points, like 25 basis points, a quarter percent, or is it like a full shot? It's very interesting. Your theory is very interesting for sure. But I want to talk about two things now that you open up the door to sentiment and bond yields. Bond yields, and I actually have a chart on this, but bond yields have been creeping back up. I was so excited, Patrick, as we approach the end of this year. I was like, yes, bond yields are finally dropping. I mean, we went down from like 4.5, just under 4.5% down to almost 1%. That's massive drop in a short period of time, like just about a month. And now they're back up and they're clawing back their way. They're at 3.51. Man, I was really hoping, Patrick, we were going to crest below. I was below 3. I wanted to hit the 2s.
Well, I think it speaks to a couple things. First off, is just the uncertainty of what's happening on the global macro scale. It's just a lot of uncertainty. As much as we see this volatility, we've never seen volatility like this in the bond market before. And as much as we've ticked up, again, we can come back the other way just as fast. So, like you, it is a little bit of, I guess, hopium, if you will, that the bond yields come back down, and then of course our fixed rates come down. But having said that, as much as they've ticked up, they can tick back down just as quickly.
Well, and you're right. And if we look like right now, this chart, we're at 3.551 right now, but it wasn't just like 4 or 5 days ago. We were at 3.2 and trending down back towards the low 3s. So yeah, you're right, Patrick. I mean, it's anyone's game in terms of where this is going to go. But I could tell you, I do know that some of the fixed rate mortgages are starting to loosen up
Just a little bit.
not a crazy amount, but definitely I recently seen a 5-year fixed rate at 4.99, I believe, or 4.95. So, and of course, that's the posted rates and so on and so forth. I've also had several mortgages renew that I'm negotiating right now, and many of them are in the 6s, the 7s, even the 8s. So, but the good news is I think it's starting to work its way through the system. That's what we got to do. We got to get ourselves back to equilibrium here so we can inject some positivity back into this market sentiment, because I don't know how you're feeling right now, Patrick, but it's ice cold out there, right? Not only is Canada going through a weather ice storm, so to speak, where that polar vortex just went across, but my gosh, things are just frozen in ice on the market in general right now, specifically speaking to the real estate market.
Well, I think it speaks to a lot of markets, and certainly what's happening right now is that uncertainty. So when we look at when bond yields had come down so much, everybody was already working in those several rate cuts over the course of 2024. There's some optimism going on, and all of a sudden CPI ticks up a little bit, and then everybody goes, whoa, holy cow, it's not what we thought it was after all. So this is just what's happening, and again, it leaves that uncertainty. We've talked many times over the years about the wealth effect, and what's happening right now is people are feeling very poor. They're feeling a lot of pressure in terms of what it's costing to live. The headlines are crushing it. There's a lot of things going on that is shifting this market and the market sentiment, and in all industries, but specifically in real estate. And I want to go back to the point that you made about interest rates and fixed rates coming down a little bit. There are banks that are doing that 4.99, but we have to keep in mind is those are retail sales. In other words, end user homeowners are getting those kind of rates with specific banks. And, there's at least room to negotiate. As investors, we're still not getting that low. At least I'm not hearing about it. Although, we'll see what happens with some of our trusted partners when they start talking and speaking the rest of this month.
Yeah, bottom line on this is the market sentiment is about as difficult as I've seen it in the last 2 years since we started this rate tightening out there in general. That's the kind of feeling I'm getting. I also, it is by far the most laborious time to be doing real estate deals right now, Patrick. But, and I stand by this, this is where the rubber meets the road. This is where the investors that are grinding right now are going to be handsomely rewarded when the tides do turn. And it may take longer than people expect, and it may be more expensive than people expect, but the tides will turn. And those that did the work during this tightening cycle will be handsomely rewarded, I believe, which is why I'm working so aggressively in this market.
What are your superpowers again?
I'm rich.
Well, let me just go on a little bit of a tangent here, just briefly. So, I just came away from the Vancouver Investor Resource Conference. So somewhere between 4,000 and 7,000 over the course of the day, individuals came to look at what's happening in the resource sector. So looking at junior miners, they're looking at gold, silver, Bitcoin, a number of things. The point is that there's a couple of billionaires speaking on stage, Rick Rule being one of them, BD being another. But when they look at certain markets, these guys have got a track record. As a matter of fact, BD has built, I think, $14 billion mining companies. So this guy knows how to produce results. But his fundamental philosophy, and he made a comment on it, but didn't go down that path. It's not his area of expertise. But the point is this, is he goes to markets that are hated. So in other words, as investors, you're right. It's laborious. It's, you have to really grind to get financing. But when you go to a market that is disliked, so in other words, right now, real estate, we know it. We see it with investors. How many are, sitting on the sidelines? How many have thrown up their hands and just walked away going,
I'm out, real estate, it's too scary.
The point is this: as investors who stay connected to the data, get out of the emotion of it, I think like a resource sector, you go to the market that's hated as an investor because it's where the opportunities live. So I just wanted to kind of put that on the table as a thought process that, we see so much negativity around investing in real estate. But to your point, and JG, I mean, you're literally in the trenches every day, and you're starting to see it. Yes, it's hard work, but there are deals there, and that's where the money gets to be made. That's what I got to say.
Absolutely. I think you're bang on, Patrick. And this is very, very interesting and definitely a fascinating time that we are going to reflect on. We're going to be doing like a post tightening cycle recap in a year or two or whenever we do it. And we're going to say, oh my gosh, remember the times. And we're going to recall some of these conversations, no doubt about it, but it is very good. And for those that are willing to do the work, if you're not willing to do the work, there's no easy money to be made, that's for sure. But if you're willing to do the work, the opportunities are there in spades right now, but they are dressed in overalls and they look like a lot of work right now.
It's so true. And I think that, again, I'm going to keep hammering this home, is that everybody looks like a genius at the top of a boom cycle. Everybody's feeling good and making money. The wealth effect's kicked into gear. Everybody's feeling rich. They're spending money. We get into a slump cycle and everybody vacates. Yet that's exactly when we need to have the courage, the knowledge, the data, the community to keep investing to grow our net worth. We'll talk about where prices have come off of peaks. Well, okay, yeah, they're down 30% or 40% off peaks, depending on property type and where. But ultimately, JG, you and I both know this, is that they're off the peak. Well, anytime you compare something to the peak of a market, and then you get into a downturn like this, let's go back to 2018, 2019. Where are prices from there? So it's all good headlines. It's all disasters. If you bought a house in 2022 intending to sell it in 2023 or 2024, well, I don't know what kind of a plan that is. But anyways.
It wasn't a very good plan.
Yeah.
Bottom line.
Yes.
Awesome. Well, that's great, Patrick. That covers our Patrick predictions and our Bank of Canada predictions for January 2024. Good shot. Ladies and gentlemen, welcome to another episode of Rein It In, episode number 31. We have a lot to cover today. We've already talked about the Patrick predictions and where the Bank of Canada is going to be going with its rate decisions, not only in January, but for the first half of this year. We're then going to talk about some population trends. We're going to extend that conversation to student immigration, which is creating a ton of headlines right now. We're then going to talk about how the tide is turning, maybe in Alberta. We got Mr. Alberta here with us today to talk about condos and how the tides could be turning. And then we're going to end the show with a global macro segment, talking about productivity, talking about China and how FDI is falling off a cliff in China. First time in 25 years. More on that coming up soon. Thanks for tuning in.
So JG, our subscribers are actually ticking up. Yes, we're winning. So just a reminder, subscribers, and for those of you who are watching this, like, subscribe, comment. Let's get those algorithms growing so we can grow this channel. And just a reminder, hit the like button, hit the subscribe button. JG, we can grow this channel.
Let's do it.
At it.
All right, Patrick, back in the news as has been for the last several years. In fact, since 2021, late 2021, after the pandemic, stuff happened and population growth obviously fell off a cliff because of immigration pretty much stopped because of the pandemic. Since then, we have rocketed up and now numbers are out. We're well over 1.2 million new people in this country. Very, very interesting. And what's been fascinating, Patrick, is the first part. I remember this clearly when this all started in early 2022, and it was all good in the hood. But it's amazing how the sentiment has changed pretty dramatically towards immigration as time goes on and as more and more people come into the country, I find the sentiment, there's a lot of talk right now about, is it too many people? Are resources being taxed? All this stuff. You've brought this up many times, but it's interesting how the sentiment on population growth is changing, but population growth does drive a big part of the real estate segment. So for investors, this is also a very good thing. So let's talk about that.
Well, these charts really show it. I mean, there's lots of these charts being shared, and you start to see just how dramatic it is when it's in this kind of a chart format. It's one thing to say, 1.3 million people, but when you actually see a visual of it and you see just how much growth we've had, it really is quite remarkable. I think there's another side of this, which is that, like rate increases, it was a lot really fast. And this is what's happening. This is the classic overreaction by government.
Well, excuse me for having enormous flaws that I don't work on.
And as much as we think about rate increases and, well, that's Bank of Canada. No, that's Bank of Canada in conjunction with the government, even though that's not supposed to be a thing. We know it is. And this is about population growth. This is really exactly what we talk about often, which is government overreacts, and this is the kind of result. So it's not that immigration is a bad thing. Both you and I are huge fans of immigration, but it's out of control. There's no method to the madness.
Now, population is growing. You've talked a lot about, Patrick, and I don't have the chart in this deck, but we showed it many times, how there's a lot of people moving from essentially every province across Canada moving into Alberta. Alberta is the only province that has interprovincial migration that's going up. The rest have lower interprovincial migration. But that doesn't mean that the population of those provinces is going down. Ontario is a perfect example. Tons of people leaving Ontario for Alberta, but Ontario's population is up significantly. Look at this Q4 2023, 200,000 people extra in Ontario. These are big numbers. As you can see, we're going back to 2020 here. You can see this trend just is going up and up and up.
Well, and if you're in Ontario and you're listening to this, you see it. You see what's happening in your infrastructure. You see what's happening in rents and the lack of units for rent, for example, just because of the sheer volume of people moving into the province. And then ultimately what's happening is in Ontario, you're hoping that people move the hell out of the province. You need space. And listen, it's such a stress on the infrastructure. And I'm not, aside from healthcare, you look at even how much, bureaucratically our government has grown. I mean, never has it grown as much, yet our services are the slowest and I guess the least service that we've ever seen. So all to say this, a lot of people coming into Ontario, as one example, if you're living in Ontario, you know that to be true. And then they're moving and migrating into other provinces, primarily Alberta.
Here's an interesting graph, Patrick, showing the pretty much direct correlation between population and the rent CPI, which is the consumer price index, or the price of rents, and how it goes up as population goes up. I found this chart to be quite fascinating because these two things are positively correlated, like 1-to-1.
Yeah, people are getting so revved up about it. Again, when you look at some of the individuals are complaining and blaming and all that. Got it, understood. I really do understand all of that. I have a ton of compassion and empathy for the people that are moving into this country, to the landlords that are having to deal with it, to the challenges that rent controls of Ontario and British Columbia are creating. But JG, you and I have been talking about this for 4 years. This is not rocket science. We talk about looking at the data, knowing that this is what happens when you have a population increasing. People have to live somewhere. They don't have credit. They don't have money. They're coming into a country they're not familiar with. They need a place to live. So as investors, what do we always want to do? I'll say it again. We want to know that if we got this business called investing in real estate, where's our clients? We got a lineup of clients, and I don't see that changing anytime soon.
Now, we're going to actually challenge that theory in just a moment, but let's keep going down this train, because the question is, if we're getting, 1.2, 1.3 million new people recently that have come to the country, what is their status, so to speak, when they're coming in? We have the net permanent, we have the net non-permanent, we have the natural increase. We know the natural increase is going down. I mean, not enough babies are being made. I'm largely responsible for that. I've been trying for years, Patrick, but I haven't successfully done it yet. But if you look, really, the one that's off the charts is the net non-permanent. Can you define this for us, Patrick? Because then we're going to extend this conversation into student immigration, which is really under the microscope right now.
Well, it's interesting that, net non-permanent is almost as much as we think it's definable, it's not definable. So it is exactly what it is: non-permanent. Those coming in on work visas, and in this case, there's international students that are here as part of this. There's temporary, as in, for example, I've got a couple of tenants that have come into the country. One was from Germany, one was from Japan. They're working for the university. They literally have work visas for a couple of years. They're both doctorates and they're doctors. They've got their PhDs. And so they're working for the university, in this case, University of Alberta. The point is this, is that all qualifies in that non-permanent resident. They're not here, and they're not searching, by the way, they're not looking for permanent residency. Now, then there, of course, is the permanent residents, those that are coming and they have visas and they're actually putting their applications in for citizenship. So that's the fundamental overall breakdown. But as let's look at in a couple of charts, there's some, I guess we'll call it ambiguity in what that really makes up.
Ambiguity. That's amazing, Patrick. You use the word ambiguity and the government tracking ambiguity in the same sentence. I'm fascinated by this. But let's speak to student immigration, Patrick, because recently this came out, interesting headline that talks about how there's nearly 200,000 international students that are here with a student visa that have no record of going to college or university whatsoever in Canada. And these are the kinds of things that are getting a whole lot of attention right now.
Well, it is, and that's because what the government has done is they finally tapped the brake and they said, okay, we're going to slow down international students coming into the country. It's out of control. And of course, they're saying that, but the government's actually blaming the universities and colleges, which I'm sure they are somewhat responsible for that. So they're putting it out there, come in, get the education, and then it becomes a cash cow for these universities and these colleges. And what's happening is that students are coming in, they've got no place to live. They're paying as much as 4 times as much. So an international student there's lots of stories of paying as much as 4 times for the same education that a resident of Canada pays. And then they're not even getting the quality of education that they are expected or that is normally delivered. I mean, it's such a controversial issue. Finally, the government wakes up, the squeaky wheel gets the grease, it's hitting mainstream media. There is an election coming up, not nearly soon enough. So what do? They have to react to it. And as government does, they react. So end of the day, they're cutting back on international students, but to the point of that other slide, well, international students, they're overstated by 200,000. So based on this, their own data shows, Stats Canada's own data says, well, there's 200,000 that came in as international students, but they haven't signed up for any university or any college. So where are those 200,000 international students?
So right now, this cap, it's a 2-year cap the federal government's announced, and they're saying they're going to cap it at 360,000 undergraduate study permits for 2024, which is the current year we're in, which is 35% of what they did in 2023, Patrick, if I read this correctly. So this means, now here's my question to you. Do you expect that next year, overall immigration is going to come down significantly? Because student immigration is a big part of the overall immigration coming into the country, a big part, like a huge part. So, I mean, if 2/3 of the student immigration we've been used to is not going to come, we may see a significant decrease here in immigration, in total immigration. Do you expect that?
Well, I think we got a couple things going on. Now, we don't have a slide for it, but in behind, and it's not anecdotal. There is data supporting it, which is to say that there are a lot of people who have come to Canada who are now leaving Canada. When you look at India, for example, there's a lot of people that have come in from India and Asia overall. But ultimately, what's happening is those same individuals are getting on YouTube and going,
Don't come here. This doesn't work. You can't afford to live. You're not going to get the job you think of.
Now, you say, well, what's the big deal about that? Go check out some of those YouTube channels. They're getting 1 million+ views. So they're having an impact. And what we are starting to see is people are they're coming and they're leaving because they can't get a job. They can't afford to live here. It is a oversell because the Canadian government's pitching these deals in other countries. So come on over to Canada. We're awesome. Get a job, have a great lifestyle, blah, blah, blah. The point is that's another part of it. Will the government cut back? Sorry to interrupt. Will the government cut back? I think they're going to be forced to. Again, squeaky wheel gets the grease. We've got definitely with an election coming up, they've got to start to plan ahead. If they don't, I think it's just going to, I don't know what's going to happen. Riots in the streets. It's the heat's getting turned up.
Now, before we terminate on this topic, Patrick, I just one thing I want to put out there is, we've just finished saying how important population is to real estate and how it drives real estate values and it drives rent specifically. I mean, we have charts where we've shown the correlation between rents. Like, look at this chart here. There's a direct correlation between rents and non-resident permanent growth. At least that's what's been happening in the last several years. And even throughout, by the way, you can see the correlation. The point is this, Patrick, if we make these kinds of moves and whether they're right or wrong, can we expect and should we expect population to come way down? And if it does come way down, is that going to affect real estate values? And is that going to slow real estate down even more than what it has been slowed down? What are your thoughts on this?
Well, I think even if they shut the population growth down today, we still have time that there's got to be an absorption rate that happens. In other words, we've still got more people wanting to buy homes, wanting to live in Canada that aren't, we've gone from an average of 2.2 people per home to now they're saying 4.4 or 4.5. So more than double is what it's going to require to accommodate everybody that's in this country today. So if they cut it back, if they cut it back for an extended period of time, or they cut it off, if they cut it back, even if they cut it in half, we will not keep up on the building side of it. And certainly, so think about this, JG, I know, we're seeing it. Builders have tapped the brake. Some of them have just hit the brakes hard. They're not building anything. Existing projects have been put on hold even. So now what's going to happen is that, let's say they cut population back, the interest rates come down, they start building again. There's a whole lag for that's got to get caught up. So this, within the system of real estate, as much as it feels like things fall off the cliff when you come from a peak of 2022 on a pricing, for example, to where we are today, it feels like it just changed overnight. It really didn't. It took some time for that to happen. It takes that 12, 18, or even 24 months for things to happen. So as rates come down, as builders get back in the game, even if we cut our population growth in half, it's not enough to keep up.
Love it. Great conversation about population, immigration, student immigration, and real estate. Gosh, my aim is precise today.
You're on point. The Michael Jordan of sticky notes right there.
Right there. All right, Mr. Alberta, for the next segment, it is possible that the tides are turning on the Alberta condo market. And listen, there's nobody better to speak to this than Mr. Alberta himself. So, we got a couple of charts here, Patrick, about the Edmonton condo market and the Calgary condo market. And fair warning to everybody that's listening, because you have been talking about this for some time, which is people, especially those from BC and from Ontario, that take their money and they go into Alberta and they buy condos as if the condo market was the same in all provinces. That's just not the case. And interesting, Patrick, we got to monitor this closely because there could be some turmoil coming down the pipe here.
Well, I've been as clear can be when it comes to condos in Edmonton. I've said, don't do it, don't do it, don't do it. You want to live in one? Go crazy, have fun, have a great life living in your condo. Do not buy it as an investment. And we're investors, and we have to look and say, well, where's that return on investment? Where's the cash flow, et cetera? Edmonton is not the place to buy a condo. No, it's not a place to buy the condo. For any number of reasons, and I won't get into it, but this just kind of verifies or really shows exactly what I've said all along. And you look at where condo prices were even a few months ago, even a couple of years ago, and then wham, they've gone from over 220,000 to an average of 170,000, and that has happened really quite quickly relative to how the general real estate market moves. That's the challenge with condos, specifically in Alberta, but specifically in Edmonton in this case. But let's face it, JG, if you're in Ontario and you've got a realtor who's not really a investor-focused realtor, you're looking at this and you're looking at these prices going, 170 grand, 200 grand, give me 8, I'll take them all. And when you compare it to what's happening in even, Vancouver and or Toronto. And so a lot of that capital is coming out of Vancouver and Toronto as an example. The point is they're unsophisticated, they're uneducated, they're buying into the price, the cheap, rather than asking the question,
well, why are they so cheap?
Oh, okay. Well, ask that question.
So here's what's interesting about this chart, Patrick. I think you're absolutely right. But another thing that really stands out to me is just how volatile this market is in general. Like, forget the big drop we've just seen here at the end of this chart. Just look in general. I mean, this thing goes from 185 to 225 on a regular basis. That's a massive swing on such a small number. You're not going from 1.8 million to 2.2 million here. You're going from 185 to 225. It's a pretty big swing, and it's quite volatile. And if you look at the number of transactions, I think it illustrates why. You get a couple transactions that are really low. People that and like you, and this is, we've talked about this many times, Patrick. When condo buildings hit the market, whether it's a condo building of 20, whether it's a condo building of 50, whatever the case may be, if there's been an oversaturation happening and those gotta go, they get marked down. That drags the entire market down with it. And I think you're starting to you could be seeing some of that. And this is the Edmonton chart. Here's the Calgary chart. Not nearly as bad, Patrick, for sure. You can see a lot more volatility in Edmonton, probably because they're communists over there in Edmonton, aren't they? That's what I've been told recently.
Right about that, they're definitely socialists, based on their local municipal government. But when we come to Calgary, when we look at what's happening in the Calgary market, I've said this many times, is that this is a lot of what's driving this right now is market sentiment. So money coming in from out of province to Calgary. Now, the difference of demographics in Calgary versus Edmonton is notable, and I think we have to pay attention to those demographics. Now, the other side of this, however, is that as things come online, there's a lot of pre-construction here. Caution Calgary, and I've said it and I'll continue to say it, which is Calgary is not the same market as Edmonton, but you have to use a lot of caution in Calgary because it gets very specific, like literally down to the right block if you're going to buy or invest in a condo in that Calgary market. This shines a light on what we say all of the time: investor-focused realtor, who they themselves are investors who understand that market intimately, because there's so many nuances from one street to the next. So is there some optimism in terms of the condo market in Calgary? Yes, but it really is based on what's happening in any given neighborhood, so to speak. There's some thought, though, JG, is that there's some argument, and there is in the short term, that all boats rise on a high tide. So when you have a bunch of capital coming into a market like Calgary, I mean, relative to, let's say, Toronto or Vancouver, it's not a big market, and condos aren't the primary focus for most people moving into that region. Having said all of that, all markets, all boats do rise on a high tide. But now you're playing the timing game, which is, okay, when do I get out? When does the music stop? When they come online? I don't know. So all things to consider.
Well, listen, that theory, all boats rise on a high tide, that's what people were telling themselves in 2022. Yeah. And those people are sure regretting it now. So I'd be careful. For those who are thinking that's a good strategy, They should be a little careful on that.
A little cautious.
Oh, God. All right. Thank you, Mr. Alberta.
You're welcome.
Okay, Patrick, for our final segment here today, let's talk about some global macroeconomic. Now, we're going to get to global. Let's start with our kind of some country economics first. Talk about employment rate. And we got a lot of charts, so we're going to kind of rapid fire through these, Patrick. But you can see here that the unemployment rate, not the employment rate, but the unemployment rate has been ticking up. We're just under 6% now across the country, which doesn't matter as much, Patrick. We've said this a million times because we are focused on what's happening in the individual markets we invest in, not just the entire country. So if you look at Ontario, for example, we're up to 6.3% in Ontario, and we were at 5% kind of in the first quarter of last year. So we bottomed out at 5%. We're now up to 6.3%. I think there's probably some headlines that are going to start making noise pretty soon.
Well, they've already started to make a little bit of noise in that uptick, and certainly it is concerning. But I look at unemployment, and I know that 5% was not healthy. So 5% unemployment, we know, puts a lot of pressure on rising costs. We know that wage increases, there's pressure there. There's the challenge of getting enough people to do the job, to get them into construction, for example. We're going to start to see a little bit of an uptick. I think we're going to see uptick in unemployment going forward. Will we hit 7%? I don't know. It's just a guess at this point. But, I've said many times, 6.5, even as high as 7 is a healthy unemployment rate. There's a churn. It keeps pressure off of the wage increases. That doesn't bode well for the increasing cost of living. But ultimately, when we look at the labor, that's what we're seeing. And given how much of our economy depends on housing and the fact that the construction of new builds has slowed right down, I think that we're going to see that unemployment rate tick up a little bit. I'm not concerned about it, but this is lagging. So you know that if we're at 6.9 or 6.3, I should say, we are going to see an increase over the next couple of months.
We had, so pre-pandemic 5.9 in Ontario, currently at 6.3. Pre-pandemic in Alberta, 6.9. We're currently at 6.3 as well in Alberta. And British Columbia, the lowest of the big three, I'll call it 4.8 pre-pandemic, now 5.6. So still a very low unemployment rate in British Columbia. Patrick, things are still rocking and rolling out there. It appears. So that's fascinating as we go through Canada, and some more interesting things that are happening in Canada, which I know you're passionate about this one. I could just see the blood starting to boil in your veins already, big guy, is we've just had this productivity graph recently released by Desjardins Economics showing Canada's labor productivity worst on record recently. And I know you got lots to say about this, so I'll leave you the floor for a minute.
Well, I won't spend a lot of time on it. We've talked about it many, many times. You know, that Canada, like the US, but let's just talk about Canada. We're not producing goods, which just literally leaves me flabbergasted. I'm going, what? When do we get off of it? You know, so when you look at, you know, mid, we were up, you know, we're happy if we hit 2%, which, you know, is rare. But the point is this, is that we have all of these resources. We're in the middle of a global, I guess, I don't want to call it a global meltdown, although sometimes it feels like that. The point is this, we're deglobalization. There are countries that need our goods, and we're like hoarders.
Oh yeah, we got lots of water, lots of oil, lots of uranium, lots of lithium. Oh, lots of fertilizer. You need fertilizer? Yeah, no, we're not going to ship it.
Like, it's like, what the hell is going on? So all to say this, we have been a consumer-driven economy for lots of years. We've been importing goods as opposed to producing or even exporting a lot of goods. And then ultimately, we look at what's happening in the housing, consumer debt driven. That was our economy. Now we have immigration coming in, GDP, all of the rest of it. The point is this, is that we have to have a shift. And whether we will or not is yet to be seen. But this is fundamentally at the core of what the challenges are. Our manufacturing is trending down. Our R&D is almost non-existent, relatively speaking. We continue to use what the US has got there in their budget for R&D. We just take their R&D. I mean, maybe that's a great way to save money, but it does not create jobs, and it is not innovation that we'd like to see in a country like Canada. So all to say this, it's not looking good on that productivity scale, and we have to be paying attention to that, which goes back to what I said earlier, which is when you look at jobs and the trend of jobs or unemployment, I start to see that happening given that our housing market has slowed down. And that was really what drove a lot of our economy. I mean, we've been talking about that for years and years, but ultimately this is going to start to show up. And this is I would call this a very bright yellow flag going forward.
Is this your platform speech, Patrick, for running for Prime Minister in 2025? Was that it right there?
It's my platform for trash talking our current federal government. So, anyways.
Well, Patrick, this gets extended because there's some stuff happening right now in China. What's interesting is some of the imports are really starting to decline. And by the way, we're seeing this in Canada. You're telling me you're seeing some evidence of this across many different countries. So imports are coming down, and I'm just going to connect these two topics for a second, because when our imports come down, well, the one country where their exports also go down is China. And for the first time in 25 years, we've seen foreign direct investment. That's what FDI stands for. FDI is down and turned negative for the first time in 25 years. And this could be connected, Patrick, down to imports, albeit I don't think it's not like exports have went down. Federal direct investment is more longer term investing. Now, people are starting to hedge their bets on China, is what I'm seeing, with FDI coming down and turning negative for the first time in 25 years.
Well, the point is this, is that, we're seeing data that is showing up more and more that China is slowing down, and China is a huge economy. We look at what's happening with China, Russia agreements being made. At the end of the day, US and Canada, we'll just talk about them, but it doesn't matter. It could be UK, Europe. They're not importing as much stuff out of China. So China is really slowing down. Some of that has to do with, the lag of inventory, but ultimately, we're seeing that whole slowdown happening in China. We can't negate what's happening with BRICS nations and the addition of the BRICS nations with UAE and Saudi Arabia, as an example. Those are big, big shifts, west versus east. And this is going to continue to be, I think this is the lag and be problematic. It's just what's happening in China right now. We can't negate what happens on a global economy. Canada's at the effect of it. We just don't know to what degree. I don't know where this one's going to go, but it's worth noting.
Well, I think I'll tell you, I don't know where it goes, but what it's very clear evidence of is, you talked about, and you said this earlier in the show, de-globalization. This is a great example of de-globalization, people pulling out of China and reinvesting into their own countries. That's what this means, by the way. And what I also find fascinating, Patrick, is it is down for the first time in 25 years. That's significant. But this is Q3 2023. By the time we get Q4 numbers, we're going to be halfway through 2024. Like, it could be way worse out there. Again, back to lagging data. And the other thing too, by the way, is these numbers often get revised. So will they get revised up? Will they get revised down? We don't know. But the bottom line is this is, it's interesting. And to me, it is a clear sign and evidence of the deglobalization trend, where countries are reinvesting into their own countries and bringing that productivity back on shore. Interesting to see what's happening. It's definitely a front row. You have a front row seat to something fascinating that's happening in the world right now. Whether good, whether bad, well, time will tell, but it's fascinating nonetheless.
Well, the thing is, listen, the indication to me is that globally things are just slowing down. There isn't a country that isn't at the effect of things. We know that there are wars going on, and those wars seem to be escalating. When we look at consumers, when we look at just the population overall, starting to keep their hands in their pocket, they're not spending. Credit card debt is going up. And by the way, for the REIN community who's coming to the meetings this week, or who have come to the meetings this week, we've got a lot more to add to this. So for the REIN members, you're going to get a lot more information at the meetings.
All right, folks, that does it for episode number 31 of Rein It In. Thank you so much for tuning in. Please like, subscribe, comment, and we'll see you on the next episode.
Thanks, JG. If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.
If you want to see more stuff like this, click there.